Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm so excited and grateful for life, welcoming you to yet another promising edition of the Extra and Speed Live. Now, before we kickstart the session, I would love to see your feedbacks in the comment section as regards to the quality of the audio visuals. So if you can see my screen, you can hear my voice loud and clear, please type in hi in the comment section so we can get this session started. So I would like to load up my comment section while I wait for your feedbacks, and let's see what is going on here. Oh my goodness, I'm unable to load up my comment section, so I'm not sure I will be able to follow up with you this morning. So let's see. Okay, I'm sorry I can't view the comments at the moment, so I just hope that with time this will be resolved, but I hope it to get resolved before the end of the session so that I can follow up with you guys. So hold on a second, give me a moment. All right, so I just got a feedback now that we are very good to go. So I will just roll on while I wait for the comment box to come on live. So on this note, I welcome you all to yet another promising edition of the Extra and Speed Live. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as we take another fresh new look at the financial market using simple parameters such as trend lines, key levels, and chart patterns to gain insight into the historical price movement within the assets on our watch list for this week. Well, so far this week we have been monitoring four major assets, which includes the US All Spot, the XAUUSD, which is popularly known as the gold spot, and the USTech100, popularly known as the Nasdaq, and of course the GBPUSD. And in fact, we've been doing pretty well in the last 72 hours, and we are going to be looking into the details on what has been going on in the market and how we are going to strategically position ourselves ahead of this New York session. For those who are joining us for the first time, you're highly welcome on board, and I'm very glad to have you around with us this morning. Well, what we do here is, as technical traders, we gather here as a community in anticipation of the New York session on a daily basis as we come here to review our current position if we have any, while we also use the information we have on the chart to position ourselves ahead of the New York session. This happens 10 a.m. UTC, 11 a.m. West African time. So I encourage you to stay tuned in so you don't miss out on the valuable ideas we shall be deliberating on today, and of course be part of our subsequent editions. As the more time you spend with us, the better you get in understanding how the strategy works and eventually be able to use the information you gather here to make your own independent trading decisions. So once again, I welcome you all on board. So with that being said, here we shall be diving right into the business, and as usual, the first thing we normally do is to check on the economic calendar. And of course, by now, for those who have been part of this session for a while now, you know how important this is, as these fundamental factors often manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to help us position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this event. So on the economic calendar, we usually focus on high impact events from the economic dockets that affects the assets on our watch list. And so far this week, the assets we've been monitoring this week has been influenced by economic features from the United States and the United Kingdom. Now for today, Wednesday, October 11, we have two high impact events that we are looking forward to. The first one here is the producer price index, which is coming up in about 2 hours from now. And for those who don't know what the producer price index is, well, it measures the changes in input prices for producers, impacting production costs, supply chain dynamics, and ultimately influencing consumer prices and inflation, hereby leading to potential market movement and of course market sentiment too as well. And another important thing about the producer price index is that it's also served as an inflationary measure, as the Fed will be looking to see what the data will be today, and this has a tendency of influencing the interest rate decisions. Generally speaking, a high reading is considered as positive for the US dollar, while a low reading is considered as negative. Now, if we look at the previous data for the month of August, it came in at an expansion of 2.2%. And generally, economists are projecting a 2.3% expansion, which is on the positive side. So we are likely going to be seeing an expansion in that sector. So we're looking forward to see what the actual data will be. Will it be just as expected, below expectations, or even beyond expectations? Then fast forward to about 10 hours from now, we are going to be looking forward to the publication of the FOMC minute. Now, this minute here summarizes the discussions and decisions made by the Federal Reserve regarding monetary policy. These records offer valuable clues about future interest rate changes, economic outlook, and inflation concerns, shaping, of course, our trading strategies and market trends. The minute can significantly impact financial markets and help us make informed decisions based on the potential impact of future policy actions. So with all the information we have gathered here on the economic calendar, we shall be moving right into the chart to look at things from a technical standpoint. And one more thing I would like us to note here is that as technical traders, this event, the anticipation of this event alone, has a tendency of influencing price action. Now, talking about price action, let's dive right into the first asset on our watch list for today, which is the US oil spot. So while I wait for my chart to load up, okay, finally it has loaded. So we're right now on the 1 hour time frame of the US oil spot chart. Now, if you look at this structure on the 1 hour time frame, it is quite clear that there has been no changes in this market since the beginning of the week. As you will see, price action had consistently kept trading within a range between the $86 level and the $83.80 area since the beginning of the week to emphasize the level of indecision in this market. And of course, when we have this kind of flat channel which emphasize the uncertainty in the market, we have no other choice than to exercise patience and waiting for either a breakout of the resistant line or the breakdown of the support line for trading opportunities. Now, at this point, we do not have any positions running right now, as you will see that since yesterday, price has not really triggered any of the setups we identified here. Now, another thing I would like to call our attention to is this range that we had a level just right, slicing that range into half along the $85.15 level, where we said we will be waiting for the breakout and retest of the structure to join an uptrend move, which has not happened yet. So we continue to hold on and wait for structures to mature here. Now, there is one more thing I would like us to look at on the 4 hours time frame, which was the basis for the decisions we are planning on the lower time frame. Now, to refresh our memories on what we talked about at the beginning of the week, so this is the 4 hours time frame here, and what I did here was to take into consideration the nature of price action since the beginning of this month, and what we were able to come up with here was this descending trend line after connecting the series of lower highs, which emphasized the strength of the sellers at this juncture in the market. And of course, you know how we do it in this community. When price action finds trend lines like this, we want to exercise patience, and then as long as price remains below the trend line, we look out for selling opportunities. But if the trend line is breached, then we get ready to buy. Now, if we look at what happened at the beginning of this week, we saw this bullish gap. We saw about let me see how many pips that is. We saw this 160 pips gap here at the beginning of the week, which reflects the tendencies of trading activities during the course of the weekend. Now, price has broken out of that descending trend line, which is a good sign that the trend line may no longer have the capacity to continue to negate the bullish attempt. And since the breakout of the trend line happened at the beginning of the week, you will see that price action has been confined within a range which emphasized the level of indecision at this point. Now, as long as price remains above that ascending trend line, above the descending trend line, it's reasonable that we look out for buying opportunity here. But one thing that we cannot ignore here is the possibility of price coming back to retest the trend line before the anticipation of another wave of bullish momentum. And if price is going to be retesting the trend line, then we will need to see the breakdown retest of the $83.80 level, which will dovetail to about how many pips? About 200 pips minimum, and depending on how price reacts to this trend line will now determine if we are going to be joining an uptrend or getting ready to join a sell-off if price breaks down the trend line to the downside. Now, with the information we have gathered here on the 4 hours time frame, let's scale back down into the 1 hour time frame. I just needed us to see how things are looking like from an holistic standpoint, so that when I discuss on the 1 hour time frame, we will all be on the same page. Now, scaling back down into the 1 hour time frame, this is what we have here, and this is what we will be using to guide our decisions for today. So as it is right now, price still remains confined within a range, and like I said earlier, as long as price remains within this range, we have no other choice than to exercise patience, waiting for either the breakout of that range to give us an opportunity to buy, or the breakdown of the range to give us an opportunity to sell. And for the fact that price remains above the descending trend line that was broken, we will be waiting for the breakout of the $85.15 level. This level here, as you will see that since the beginning of this week, sellers have continued to negate all attempt by the buyers to break out of the structure. Now, if I'm going to be buying here, I want to see price break out of the $85.15 level, retest the structure, giving me further confirmations that buyers are getting stronger, and this will reflect on the chart as continued buy pressure around or above the $85.15 level. Then we can join the uptrend move, and if price continues to climb, then a further breakout of the $86 level, which happens to be the highest point price action has been for this week, will be welcoming more buy position in this market. So that is how we are going to be holding on to a bullish bias on this one. However, in as much as we're looking out for buying opportunities here, we cannot ignore the potentials of the sellers. Now, like I said, we can see how this level here at the $85.15 level had continued to negate the bullish attempt in this market. So if this persists, then if price breaking down the $83.80 level will be all we need to join the bearish move. Now, if price breaks down the $83.80 level, we are not jumping right in, as we will need some confirmations like a retest of structure on our lower time frame before joining that bearish move to the downside. And in fact, if price breaks down the $83.80 level, it would have taken out all the buy positions here to signal a bearish move to the downside. Now, if we are joining this bearish move, we need to take note of this descending trend line we spotted on the 4 hours time frame, as it now depends on how price would react to this descending trend line that will now determine if we are going to be adding more sell position. That is, a breakdown retest of this trend line will welcome selling opportunities. But if buy pressure resumes above the trend line, then we get ready to join an uptrend move. So at this point in time, it's still looking very bullish, but we could take advantage of the counter trend opportunity if it happens that price breaks down and retests the $83.80 level. So this is my view here on the US All Spot for today. So let's mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So to simply put, our center of focus is for today's trading session is basically between the $85.15 level and the $83.80 area, where a breakout of this, the direction of the breakout of this range will be giving us an insight into where price is likely going for today. So if you have any questions whatsoever as regards to the current setup, or you need me to do some clarifications to my explanations, feel free to let me know in the comment section. I don't know if my comment section is up right now. Let me just check. All right, I think it is up. I think it is up here. So if you have questions, please let me know in the comment section, and you can take that time out to mark out these levels on your chart. All right. So in the absence of no questions, I want to assume that we are all on the same page here. So in that regard, we shall be moving on to the next asset on our watch list for this week. So the next asset on our watch list for today is the USTech100, which is popularly known as the Nasdaq. And in fact, in the last 24 hours, we have been doing very well on this asset, as we have been buying since the beginning of the week, and we had the privilege of adding more positions to our existing trade during the New York session yesterday. So for the sake of clarity, I would like us to run through how the week started for us all in this community and what led to the decisions that we made in buying the USTech100. So at the beginning of the week right here on the 1 hour time frame, we initially identified that price action was confined within this range between the 14,900 and the 14,840 level, to emphasize the level of indecision in this market. And of course, you know how we do it in this community. Whenever price action falls into this kind of range, we do want to exercise patience, where we wait for either the breakdown, retest of the support line to give us an opportunity to sell, or the breakout retest of the resistance line to give us an opportunity to buy. Now, considering the strong bullish momentum that led to this point, I will be sharing with you in details what things are looking like on the 4 hours time frame in a moment. We were leaning towards buying opportunity as at Monday's trading session. And if you look at what happened here on Monday, we saw how price broke out of the resistance line here at the 14,900 level to trigger our first buy position for the week. And remember that we also added one more level at the $15,000 area, where we said if price action breaks above the structure, we will be welcoming more buying opportunities. Now, during our live session yesterday, we also acknowledged this level at the 15,100 area. That level was initially a selling niche at some points during our live session yesterday, and we said if price action does break out of that structure, we are going to be adding more buy position to our existing trade. So currently, we should be having about 3 positions running in profit right now. And if you still have your buy positions running right now, let's see how many pips that is. So for the first buy position, we have about 275 pips in profit. And from the second buy position, we have about 175 pips running in profits. That's a total of 450 pips. Then for the third position here, we have about 80 pips running in profit. So on total, we have over 500 pips running in profit on the USTech100, at least for the first half of this week. And that is not a bad figure at all. So once again, congratulations to everyone who has been part of this profitable journey. Now, the next thing we are going to be doing right now is to move our stop losses. As you all know, that when price action moves significantly well in our favor, we do want to be moving our stop losses to secure the current position. And from the way things are looking at this point in time, I will be suggesting that that zone around that entry point is going to be where we will be moving our stop losses to. That's between the 15,100 and the $15,050 area. Let's move our stop loss to anywhere here. And while we are trying to readjust our stop losses, please note that we do want to be giving enough room for price action to breach such, just in case we have some retracements that come down before the uptrend continuation happens. So with a well-secured position at this juncture, what is going to be our next line of action for today's trading session? Well, before we go into what our plans are, I would like us to run through the higher time frame so that we can have an holistic perspective into what is going on in this market, and at the same time serve as a privilege for those who missed out on yesterday or Monday's trading session to be on the same page with us. Now, the first thing we did at the beginning of the week was to run through, I think we started from the daily time frame, right? Yes, we did start from the daily time frame. And on the daily time frame, the first thing we observed is that price action has been on a strong bullish trend since the beginning of this year. And when we went on to further connect the series of higher lows here, which emphasize the strength of the buyers in this market. Now you can see price had consistently respected that trend line, and not until the mid-month of September that we witnessed the first breakdown of that ascending trend line, which of course when price breaks down of a structure like this, it's a sign that we are likely witnessing a momentum shift. Now look at what happened in the last 4 weeks now, I think 4 weeks to be precise. We saw price break down the structure, came back into this zone here at the 14,550. Now, we acknowledge this level as a significant structure during last week's trading session. In fact, it was our key level for last week, and I emphasize how this level had played a major role in determining the direction of price action since the month of May. Now, if you look at this level closely, that is the 14,550, you will see that in the month of May, it was initially serving as a selling niche, and after price broke above the structure, since that moment, price had remained above that level. And every attempt by the sellers to break down the structure has been met with resistance from the buyers at every point in time. Look at what happened here in the month of August. We saw resistance from buyers as sellers found it difficult to break through. And in the last couple of weeks, we saw buy pressure again resume around that area. Now, the inability of sellers to break through this structure is a sign that this area is a strong buying niche, and chances are that buyers could come in and push price to the upside, and this led to the idea of us buying at the beginning of this week. Now, there's one thing I want us to note here about the breakdown of this ascending trend line that we spotted here. From a technical standpoint, when price breaks down of a key structure such as this trend line here, we expect that some point in time price is likely going to come back, retest the structure that was broken to incite a downtrend scenario, and we never can tell, it could lead to the breakout of that structure to incite another wave of bullish momentum. And as it is right now, price is gradually approaching that structure. As you will see, we had an attempt around the 15,250 during the early hours of today's trading session. Now let's scale down into the 4 hours time frame to see things more clearly. Now on the 4 hours time frame, we had a reversal setup here. So we had a structure that looks like a double bottom structure, as you will see right here, and we had the neckline of that reversal pattern marked out along the 14,850. Now, to validate this reversal pattern, we need price to break out of and retest the neckline to push price to the upside. And we saw what happened last week Friday. We saw the breakout, price came back to retest, and the multiple buy pressure here incited the bullish idea we had. And I'm of the opinion that price may likely continue into that descending trend line that we identified on the daily time frame. So this is the descending trend line here. Let me mark it out so we can see. Now let's see if the market will get that far. I'm of the opinion price will get into that area. Now, if price gets into the structure, depending on what happens here, will determine if we are going to be adding more buy position or getting ready to sell. So if we are going to be adding more buy positions, we want to see price break out, retest the trend line to the upside, add more buy position. But if continued selling pressure persists below the structure, then this will be a sign that buyers are finding it difficult to break out of the trend line. Then this could incite a bearish move. Now, in anticipation of today's New York session, how do we intend to position ourselves for trading opportunities? So scaling down into the 1 hour time frame, let's zoom right in, and the latest structure that was broken right now is the 15,100. Now look at what happened after the engulfing candle. We saw that as soon as price tested the 15,250, this is the highest point price action has been for this week. We saw selling pressure resume to the downside. Now, if I'm going to be adding more positions today, I want to see price take out this buy position at the 15,250 to capitalize on an uptrend continuation. Now, there are two ways to which we can capitalize on this move. Of course, for those who have been parts of this session for a while now, you know how we do it. But if you are new, let me explain to you what we are going to be doing. Now, for those who have been profitable on the USTech100, that is, if you had joined us when we were buying at the 14,900, the 15,000 area or the 15,100, you definitely be in profit right now. So what this means is that we can afford to leverage on some of the profit we made so far this week to test waters above the 15,250. So we can easily place a buy stop order above the 15,250 to join the uptrend scenario. And if it doesn't work, then we know that we are only risking some of the profit we made so far this week. However, if you are joining us for the first time, then I encourage you to wait for confirmations to happen. So if I will give a visual representation of what I'm talking about, so you want to see a breakout happen, then scale down to your lower time frame. So it could be the 5, the 10, or the 15 minutes time frame to look out for signs that sellers are finding it difficult to drop and stay below the 15,250. And this, of course, will reflect on the chart as continued buy pressure around that zone to incite an uptrend continuation. So this is how we are going to be getting ready for another wave of bullish momentum here. And if price goes on to break out of this descending trend line we spotted on the daily time frame, then we will be looking out for more opportunities at the retest of the trend line to add more buy position to our existing trade. Now, in as much as we're looking out for buying opportunities here, we cannot ignore the potentials of sellers too. Now, remember that price action is gradually approaching that resistant line, that descending trend line, which has been supporting some bearish momentum in the last couple of months. And another thing here is this rejection of the 15,250 by the sellers. Now, if price finds it difficult to break out of this 15,250 and selling pressure continues, then we might likely be seeing price drop to the downside. Now, to help us guide our decision for today, I would like us to mark out a trend line that we will be using to guide our decisions for today's trading session. And if I bring out my line chart and look at what has been going on here since the beginning of this week, we have a beautiful trend line here that we can use to guide our trading decisions. So hold on a second, let me mark this out correctly. I think we are going to be having a couple of them here. So I will make this one the major one, the thick one on your screen, and I will make the lighter one the minor one. So let me bring back my candle chart, and here we go. So we have this ascending trend line marked out on our chart. So as long as price remains above this ascending trend line, we feel comfortable in our buy position. However, if it so happens that selling pressure continues and price consistently found lower lows and lower highs within this structure, then a breakdown of the ascending trend line, which interestingly shares a beautiful confluence with the 15,100 area, will be welcoming selling opportunities in this market. So the breakdown of this ascending trend line will be a sign that this trend line here may no longer have the capacity to continue to negate the bearish attempt, and if this happens, we get ready to sell. Now there's one thing I would like us to take note here, that we are not going to be getting too excited as soon as the breakdown happens, as we will need some confirmations before we jump into the sell position. And this confirmation would reflect on the chart as a retest of either the 15,100 or the ascending trend line to incite this bearish momentum. So we are not going to be selling unless price breaks down both the ascending trend line and the 15,100 here. So this is my view here on the USTech100. This ascending trend line is going to be playing a major role in determining the direction of price action. So you want to be marking out this trend line on your chart, the 15,100 and the 15,250, where the breakout of the 15,250 will welcome buying opportunities, and the breakdown of the 15,100 will welcome selling opportunities. So if you have any questions as regards to the current setup, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions, while you also use that time to mark out these levels on your charts. All right. So in the absence of no questions, I want to assume that we are all on the same page. So in that regard, we shall be moving on to the next asset on our watch list. I see your comment, Wizzy Money. Good morning to you. Thank you very much for checking in on us here this morning. So moving on to the next asset on our watch list. So the next asset on our watch list today is the GBPUSD, and that is the cable market. And in fact, we've been doing pretty well on the GBPUSD in the last 24 hours, as we currently have 3 buy positions running in this market. Before we go into the details here, I would like us to run through how the week started and what led to the decisions we made so far this week. Now, at the beginning of the week, we acknowledged that price was finding lower highs and lower lows, leading into a situation where we positioned ourselves for bearish opportunity. And prior to the selling opportunities, we acknowledged the lower highs, and in fact, we connected this series of lower highs, which gave us this descending trend line. And one of the things we said here on Monday is that as long as price remains below that descending trend line, we shall feel comfortable in our sell positions while we look out for more selling opportunities down there. But if at any point in time price breaks out of that descending trend line, then we want to be getting ready to buy the GBPUSD. Now, we saw our first sell position for the week after price action broke down the support line of this range, as we saw our first sell position triggered at the breakdown of the 1.2200 level. We moved our stop losses accordingly, and we saw price take us out of our sell position at a worst case scenario break even, hereby leading to the breakout of that descending trend line to trigger our first buy position. And since that moment, we have been buying the GBPUSD. And remember, we also acknowledged levels such as the 1.22360. We also had the 1.22650 level, all of which we said a breakout retest of that structure will be welcoming more buy positions to our existing trade. And as you will see right now, we are very much profitable. So the first position here is running with about 88 pips in profit, while the second position here is running with about 50 pips. That's a total of 140. And then we have the third position running with about 25 pips. So we have approximately 150 pips in the last 3 days in this particular market. So congratulations to everyone who had been part of this profitable journey. Now, the next thing we want to be doing here, as you all know, is to move our stop losses right now to secure the current buy positions as we look out for more buying opportunities. And based on this current structure, I'm of the opinion that as long as price remains above the trend line, we look out for buying opportunities. So our stop loss will be anywhere around the 1.22650 area. Remember to allow enough room for price action to break, just in case we could witness a false breakdown of structure at any point in time. Now, with a well-secured position at this juncture, what is going to be our next line of action for today's trading session? Now, before I go deep into what we are looking at for today, I would like to refresh our memories on what we saw on the 4 hours time frame before we go into the details here. Now, on the 4 hours time frame, I would like to emphasize here that we talked about the bearish momentum, and in fact we went ahead to acknowledge a descending channel that had been guiding this bearish momentum. So we connected a series of lower highs, giving us this resistant line of the descending channel, and we also connected a series of lower lows, giving us the support line of this channel. Now, fast forward into the last week of the month of September, we saw that as soon as price broke down the 1.22650, we saw price fell into a range between that level and the 1.222040 area. And within this old range, we begin to notice that buyers were gradually gaining momentum, which resulted in this higher low we saw here, giving us this ascending trend line we had here. And this led to a significant breakout of the resistant line of that descending channel, and we saw price come back to retest the resistant line, and we agreed here on Monday that as long as price remains above that resistant line of that descending channel, we'll continue to feel comfortable in a buy positions while we look out for more buying opportunities in this market. Now, we also had this level here at the 1.22650. Remember, this level had been a strong selling niche since the last 3 weeks in this market. We saw how buyers were finding it difficult to break above this area. The same thing also happened on Friday of last week trading session. However, this week we finally saw the breakout retest of the structure, and with this breakout of the 1.22650, let's assume that the sellers have been taken out here, and as long as price remains above this level, will continue to hold on to a bullish bias. So for today's trading session, the 1.22650 level is going to be playing a major role in determining our decisions, and of course makes us feel comfortable in whatever position we are. So what I'm simply saying here is that if price remains above that 1.2265, let's feel comfortable in our buy position, and if anything like the breakdown retest of the structure happen, could incite some selling opportunities into this ascending trend line, probably to incite an uptrend continuation, or the breakdown of this trend line could incite a sell-off in this market. So let's leave that to when price gets into that area at all, that is if it ever gets into that structure. Now, with the information we have here on the 4 hours time frame, let's scale down into the 1 hour time frame, and let's see how we intend to position ourselves for today's trading session. So this morning, while I was trying to dissect the current market structure with the hopes of identifying potential trading opportunities, this is what I was able to come up with here. So hold on a second. So this is what I was able to come up with this morning. So I took into consideration the nature of price action since the beginning of this week, and you will see how price has uniformly found higher lows in this market. And when we connect the series of higher lows here, we have an ascending trend line that we can use to guide our trading decisions for today's trading session. Now, as long as price remains above this ascending trend line, we shall feel comfortable in our buy position. Now, if you look at what has been going on here in the last 3 to 4 hours, you will see that sellers have been trying to break down that ascending trend line, but has met stiff resistance from the buyers. Now, if the bullish momentum here persists, that is the buy pressure here persists, then I want to be looking out for more buying opportunity if price will break out of this resistant line at the 1.2300 area. Now you can see what has been going on since the early hours of the week of today's trading session. As soon as price got into the 1.23, we saw selling pressure persist there. Now if I'm going to be adding more buy position, I want to see price break out of the structure to join that uptrend move. So that means price still remains above the ascending trend line. Now there are two ways to which we can capitalize on this. For those who are with me and know how to do this, but if you are new with us, then let me explain to you in clear terms. Now, if you are profitable so far this week, that is, if you had joined us early, that is when we bought at the structures here, then you can afford to leverage on the profit you have made so far this week to test waters above the 1.23 by placing a buy stop order above this structure. Now, if we place a buy stop order there and price gets triggered, if it doesn't work, then we know that we're just risking some of the profits we have made so far this week. However, if you are new with us and this is your first time taking a position, or probably you're coming from a clean slate, then I encourage you to exercise patience, wait for a retest of structure to happen on our lower time frame before jumping into a uptrend scenario. So as long as price remains above the trend line and breaks out of the 1.23, we'll hold on to a bullish bias. Now, in as much as we're looking out for buying opportunities here, remember that the pound sterling has been on a strong bearish pressure in the last couple of months, and in that regard, we cannot ignore the potentials that sellers can bring to the table. Now, if we consider the continued selling pressure around the 1.2300 area since the early hours of today, and buyers find it difficult to break out of the structure, then the chances that price will break down the ascending trend line will increase. Now, if price breaks down the ascending trend line, this will be a sign that we could have a momentum shift, as the trend line may no longer have the capacity to negate that bearish attempt anymore. Now, one thing I'm going to be looking out for to sell is a breakdown of structure, retest of that structure to confirm that truly buyers are finding it difficult to climb above that ascending trend line. Then we can join that downtrend move. And if we join, we can have more opportunities at the breakdowns of levels such as the 1.2265, 1.22360, and the 1.2200 area, where it will lead us back into that major ascending trend line we identified on the higher time frame. Now, depending if price gets this far, that is, if it gets this to this area, depending on what happens here, will now determine if we are going to be adding more sell position, that is the breakdown retest of structure, or we are going to be buying at the appearance of a reversal pattern. So let's see how the market will play out here in the next 24 hours. I still hold on to a bullish bias here based on the fact that price still remains above that our ascending trend line. However, if it breaks down the ascending trend line, then we can now start considering selling the GBP USD. So these are my views on the GBPUSD for today. If you have any questions, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off and wait to see if there's going to be any questions, and you can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. All right. So, in the absence of no questions, I want to assume that we are all on the same page. Ismail 5, I see your comments. Thank you. All right. So, moving on to the next financial asset on our watch list. So the final asset on our watch list for today is my favorite, and that is the XAUUSD, popularly known as the gold spot. And on the gold spot so far this week, we have been doing pretty well, though the week started very sluggish as we had a slow start to the week. But our patience later paid off as we were able to take advantage of a buy position. In fact, we have two buy positions running at this point in time. Now, before we go into the details of what happened, I would like us, for educational purposes, I would like us to run through how the week started for us all and what led to the decisions we made so far this week. Now, during our live session on Monday, we acknowledged a potential reversal pattern, and despite the strong bearish momentum in this market, of course, we know how the market has been on a strong bearish move in the last 3 to 4 weeks in this market, which we of course took advantage of as well. And we saw price nosedive all the way into the 1,815, 1,810 zone, and something interesting happened here last week. Now, despite the strong bearish momentum in this market, we saw how it became difficult for sellers to break through this zone around the 1,815 and the 1,810 area. Now, the inability of sellers to break down this structure throughout the course of last week was a red flag for us that buyers may likely be gaining momentum behind the scenes. And in that regard, we were able to project a reversal pattern here where we had a temporary demand zone at the 1,815 zone. And of course, you know how we do it when we project reversal patterns on market structures. The next thing we want to be doing is to mark out the neckline of that reversal pattern, which will be needed to, a breakout will be needed to validate that this is now a reversal pattern. And interestingly, we had a neckline situated at that psychological level at the $1,830 area. Now, we were waiting for the breakout of the structure to happen last week, and look at what happened at the beginning of this week. We saw a bullish gap which reflects the tendencies of trading activities during the course of the weekend. And since the breakout happened, this had validated that reversal pattern. And since this week started, we noted that price was confined within this range around the 1,855 and the 1,846 level to emphasize the level of indecision at the beginning of this week. And when we notice this, you know how we do it in this community. When price action falls into a range like this, we do want to be exercising patience, waiting for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And considering the strong bullish momentum, we witnessed our first buy position as price broke out of the 1,855 level And of course, if you had missed out on that first buy position, remember we talked about a potential retest of structure right here on Tuesday, where we said we'll continue to hold on to that bullish bias. And during our live session yesterday, we talked about another opportunity of adding more position if price action ever breaks out of the 1865, which of course happened during the early hours of today. So at this point in time, we should be having a minimum of 2 positions running in profit on the XAUUSD. Now, if you look at what we have here, the first position currently is running with about 195 pips in profit, while the second buy position at the breakout of the 1865 is running with about 90 pips in profit. So we have roughly 300 pips in profit from 2 buy positions on the XAUUSD, which is not bad a number for the first half of the week. And once again, congratulations to everyone who are taking advantage of this opportunity. Now, the next thing we are going to be doing right now is to ensure that we secure the current buy position by moving our stop losses accordingly. And to move our stop losses right here, I will be suggesting that anywhere around that first entry point seems most appropriate to move the stop loss, while we ensure that we give enough room for price action to breathe. Now, with a well-secured position here, I'm still of the opinion that price will continue to the upside. Now, if we consider the Hamas-Israeli situation going on right now, it's like an economic turmoil. Majority will want to be placing their funds in a safe haven, and the gold is one of the safest haven that one wants to place its funds in. And because of these expectations, I'm of the opinion that price will still continue to the upside. Now, to guide our trading decisions for today, I was able to spot an ascending trend line, which we are going to be using to guide our trading decisions. And after connecting the series of higher lows since the beginning of this week, we have this beautiful ascending trend line to work with. And what this simply means here is that as long as price remains above this ascending trend line, we shall feel comfortable in our buy positions for today's trading session. Now, for those who had missed out on this opportunity, well, let's see if the market will be giving us another chance to be part of this uptrend scenario. And of course, you know that from a technical standpoint, when price breaks out of a key structure such as the 1865 here, we expect that some point in time there could be some profit taking activity, which will reflect on the chart as a retracement back to retest the structure, which lines exactly with that ascending trend line to incite an uptrend scenario. So if you had missed out on the breakout of the 1865, let's see if the market will come back and retest the structure to incite another wave of bullish momentum. So let's keep this in mind. Let's mark these levels out and look out for more opportunities to maximize this move. Now, in as much as we're looking out for buying opportunities, let's note that sellers could still come in too. Remember, we are looking forward to some economic events from the US, which are high impactful events, and they could incite some volatility here. Now, if it so happens that the 1865 is broken to the downside, then price would have also broken down of that ascending trend line for the first time this week, and this will be a signal that a momentum shift is likely going to be happening. But because we have a breakdown doesn't mean that we jump right in, as it could still turn out to be a false breakdown. So for us to sell the XAUUSD, we need to exercise patience and wait for confirmation, which would reflect on the chart as a retest of structure on our lower time frame, where signs that buyers are finding it difficult to climb above the ascending trend line will be all we need to join a downtrend scenario. But I doubt if this is going to happen today, but if it happens, we want to be on standby to capitalize on that move. So on the XAUUSD, I'm still holding on to a bullish bias as long as price remains above that ascending trend line. So these are my views here on the XAUUSD for today. So you do want to be marking out these levels on your chart. Most importantly, the trend line here, which will be playing a major role in determining the direction of price action. So if you have any questions or you need me to do some clarifications to what we've talked about so far, feel free to let me know in the comment section. So I'm going to be taking the next 10 to 15 seconds and wait for you for your questions if you have any, while you can also use that time to mark out these levels on your chart. All right. So in the absence of no questions, I assume that we are all on the same page and that all I've said so far has been quite comprehensive enough for us to adopt into our plans for the New York session today. So thank you very much for your listening here. So I really appreciate every single moment I had with you guys today. It has been wonderful out here with you. And we were able to attend to 4 major assets, which includes the USOILSPOT, the USTech100, popularly known as the NASDAQ. We also treated the GBPUSD, and finally we attended to the XAUUSD, which is popularly known as the gold spots. And all of these assets we were able to use simple parameters such as trend line, key levels, and chart patterns to gain valuable insights and get a viable trading setup that we can use to position ourselves ahead of today's trading session. So, and I do hope you are able to mark out these levels on your chart, as we will be needing them as a reference point. I'm very confident that with all the simulations we made during this live session, we are able to capitalize on the next potential move in this market. For those who joined us for the first time today, I do hope you are able to gain 1 or 2 things from what we discussed here today. And I encourage you to be part of our subsequent editions, as the more time you spend with us, the better you get in understanding how our strategy works in this community, and at the same time, eventually help you to make your own independent trading decisions using the informations you have gathered here. So once again, I welcome you all, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing, and at the same time get ready for tomorrow's trading session. So it's on this note I wish us all the best of luck, and remember, we are not getting too excited. We want to allow our structures to mature before we jump into any position. Do have a wonderful evening, everyone. Bye-bye.